Good morning, all. I just wanted to do a sentimental update from Friday because there was big moves that we saw on Friday, and I think we've had a pretty decent accuracy on the forecasting on Friday. So I just wanted to see how we did perform from Friday's analysis. And I was saying, we were going, they were going long, not we were, but they were the retail guys. They were going long against the moving average, so it made a risky sell. And look what's happened. So we can now draw a new box, a punishment zone. So if you're new to what a punishment zone is that we're just marking the crossover of the sentiment against its moving average. So we can see here, we can create a zone here. Where are you? That looks horrible. Yeah, rectangle. Here, yeah, that's right. So this is now a punishment zone. So this is going to be a resistance. So if we come up, it's going to possibly challenge that. It's going to might struggle because they've gone long, and so there has to be someone to counter that trade, right? And that's the logic for the supply basis. The thesis for that to be a supply is that the retail guys have gone long in abundance. So who has to counter that trade? It has to be the broker, it has to be the banks, it has to be the market makers who counter, who take the other side of that trade. So if someone buys X, someone is going to sell it, and likewise if someone sells X, someone wants to buy it, and if retail buy it, someone has to sell it. So this is why this is a supply, and you can see how we did probe above it a little bit and we fell since. This was resistance and now it's still resistance. In fact, we can maybe elongate that. We can see if that did have a reaction. It did have a slight reaction here on that candle work. Here. But we went up and then really dumped, and because they went really long. Now this might not be them necessarily going long, but less shorts, right? So you have to remember more longs is the same as less shorts. So what happens when we have less shorts is because people get stopped out and they have to exit, therefore less shorts. They were short, but this means that they got out. This is them being less shorts. All right, so went up to punish them, created a punishment zone, and now we fell. And then when we get the crossover of the two, then we'll create a zone below. And this might be an important level here. So we'll keep this on. Right? See how we did touch it. We respected it quite well. And the logic for that is because they went long on that candle work. Some respect here and a decent respect there. So this is going to be interesting in 2017 and 2021. And what's cool about these boxes is that you can use them for entry and SL. So what we're looking at there is a $6 stop loss. We fell a lot. How much did we fall? $30, $35. So it's a very good trade. It's like a 4 or 5 R trade. Stipulate your stop loss, and then you try and look for a free R. And if it continues to fall like this, you let it run. So that's gold. Okay, so I said it was a sell and we fell, and I explained the reason why that's now supply. It's like a institutional supply level, and like how this was as well. Look what happened, and this was, look what happened. Okay, that's gold. Oops. Quick look at euro actually. So let's see. So they started probably less short again, because I don't know if anyone would be buying up there. That would mean, to me, looking at the price action, that tells me less shorts, because the price action was so aggressive to the upside that would have stopped people out. They would have had their stops at 110.50 probably. Yeah, round about here, and this is getting desperation, panic zone. And then we got the SLC. So this is less shorts. So we had the buy here, so we can map that. Yeah, I won't bother mapping it, but you would get the idea, right? So we had the crossover here. So you're looking to place a stop below, like below the, even could be there even. Your risk reward has been fantastic there. So it's just a case of knowing when your stop is. And so let's now create the zone here. So this is going to be a resistance at 110.18, 110.70. Okay, so that's going to be a resistance on the euro. And then let's look at the S&P. They'll go to DAX. And they keep selling it, don't they? So we're staying quite buoyant because they're selling it. They sold it in a very big way. They did go long immediately, but then they sold it sideways. They sold it, and then they sold it. So we probably are going to continue to go higher. And we are a little bit extreme at 16, 15, 15, 16% there. So we'll probably continue to go higher because they keep selling it. And S&P, pretty crazy moves. But you see how our box held. They shorted it, so therefore, we created demand, and it did hold, which is cool. And this is very crazy. It went long, got crushed, and then they shorted it here, and then they got crushed. And this is possibly going to send things flying because this is quite an aggressive move on the sentiment. So this is like saying, no, this is definitely going to fall. We're going to get involved. Boom, and up we come. So this is probably going to break that high Monday, Tuesday, all right, because of that. Okay, and we've got some supports. Support. That was a resistance, and that was obviously a support because we're above US 30, and then we'll wrap up. And quite looking forward to next week, actually. It's going to be quite interesting. I don't think I'm going to place any trades next week because I've got so much to be getting on with, but I will definitely be trading the following week and the week after. But this week is just a bit too hectic for me because I'm moving home. So they've gone along, so they, it fell and they got punished. So we can definitely draw a box. We can just map to this one. So this is going to be a punishment zone. And they might sell it. If we do, then we'll come up and break that box. So currently we've got a little bit of resistance overhead on the Dow, and above 115 ish, then we will fly because then we'll use it as a support and a springboard to bounce off of. Okay, so therefore they went long, so they got punished, and they're starting to sell it. So we're going to come up to challenge this resistance. So that's it. So hopefully it's helpful. Gold was a great spot. I think indices are going to continue higher because of the sentiment, basically, and it's nothing to do with your Elliott waves. So if you're thinking about getting involved in that, it isn't anything to do with it. The market makers want you to be using Elliott waves because then they can punish you, right? It's more to do with the sentiment. This is the motivation, the logic, and the driver for the moves because they're impulse moves based on emotion. Nothing to do with Elliott waves. So forget that. You would just be wasting your time. It might give you a good idea, like a confluence for technicals, but don't forget your sentiment. Okay, so have technical and sentiment. Don't just have technical because you'll lose money. This tells you the driver and the rationale for the moves because someone has to counter the trade. Okay, and if you understand that, why the bank would want to sell is because the retail guys were buying, and they'd want to buy when the retail guys were selling. Because there has to be someone to take the other side of that transaction, you see? And this is why sentiment's more powerful than your technical. All right, and I'll speak to you guys tomorrow. Try and get early. Maybe it might be about 8 or 9, but we'll see how we go. And I'll speak to you guys soon. All right.